Everybody, welcome to Bura. In this episode, I'm going to be talking about how YCombinator is telling all startup founders to prepare for the worst. All right, welcome back. So this is incredibly interesting news. So if you don't know what YCombinator is, it's kind of like an incubator or a startup accelerator. So the idea is that it's a place and they have kind of like offices and, meetups and whatever. And it's a place where you can go and get funding and plan and get people. It's kind of like, it's basically a place, if you have a startup idea, you go to. Thing is that I've been doing this for quite a while here, and I remember 10 years ago, and that is 10 full years ago, that there was a quote-unquote startup bubble, right? And, it was 2012, 2015, 2016, 2018, everyone's saying there's a startup bubble. And I would absolutely have agreed with that. But here's the thing. If I had shorted startups in 2012, being early is just as bad as being wrong here. But the thing is that even I have profited from a lot of this here because startups require software to make, and there's not enough people to make that software, hence the learn to code market has been really good for me here. So this is really interesting because there's a lot of things going on here. This first sentence makes everything up here. YCombinator, a Silicon Valley kingmaker, is advising portfolio founders to plan for the worst as startups across the globe scramble to navigate a sharp reversal in a 13-year bull run. Okay, so 13-year bull run. That is really cool. And exactly is what it is. So, 2011 is really when it started here. Or maybe even 2010. I know that's, it's right after the great financial crisis, they started printing money. And how does that work? Well, printing money goes from the central bank. One of those things it goes to is hedge funds. And hedge funds, what do? They fund startups. And it's kind of like this circle where more startups get more funding and then they sell, and then it just keeps on going and going. So are we going to see a massive sharp reversal? Well, YCombinator thinks so. For those who don't have the runway to reach default alive, which I'll talk about in a second, YCombinator is strongly suggesting that they consider raising money. That's not necessarily a bad thing, right? If you plan to raise money in the next 6 to 12 months, you might be raising at the peak of the downturn. Remember that your chances of success are extremely low, even if your company is doing well. We recommend you change your plan, the firm said, as an economic downturn here. So basically, let's take a look at, I think it's a 10-point plan. Yes, okay, they have a 10-point plan for any startup here. I'm going to be talking about the ramifications here. So first, no one can predict how bad the economy will get, but things don't look good, okay? So the big thing that you need to understand is you want inflation to go down. The more inflation goes down, the more stocks go down, the less interest rates have to go up. If you think this is bad and inflation gets worse, then the stock and interest rates will have to go up and things are going to get even worse. You want things to get, you basically want things to deflate almost to pre-pandemic levels. And I know, because I own stocks too. That's a huge drop and you have to plan for that, right? So the safe move is to plan for the worst. I always plan for the worst, by the way. If the current situation is as bad as the last two economic downturns, the best way to prepare is to cut costs and extend your runway for the next 30 days. Your goal should be to get to default alive here. So if you don't know what default alive is, so default alive is where you have enough cash to basically to fund your operations. That's something that's you definitely want to do here. Default dead is the opposite of that, where you don't have enough money. If you don't have the runway to reach default alive and your existing investors or new investors are willing to give you more money right now, the same terms as the last round, you should strongly consider taking it. Regardless of your ability to fundraise, your responsibility is to ensure your company will survive if you cannot raise money for the next 24 months. Understand that the poor public market performance in tech companies significantly impacts VC investing. VCs will have a much harder time raising monies, and their LPs will expect investment discipline. Okay, investment discipline. I have to just laugh. Really, have we seen a lot of investment discipline in the last 2 years? No. In the last 10 years, maybe a little, right? Certainly not as much as before the great financial crisis. The GFC of 2008, much more investment discipline there. But anyway, so there's a lot of text here. This one's a key one. For those who have started your company within the last 5 years, question what you believe to be normal fundraising environment. Your fundraising experience was most likely not normal, and future fundraisers will be more difficult. Okay? Newsflash, you have to evaluate your company at a reasonable amount. And usually that means 1 to 5 times sales. So if you make $1 million a year, you usually sell between 1 to 5. However, if you're a software as a service company, that could be 10 to 15x, right? 15x is a bit much here. So if you make $1 million and you have like $1 million worth of subscribers, you can in theory sell to 10 to 15 million, right? So that is probably not going to be a thing here. So the thing is that if you are willing to sell your business, you do have to do maybe less evaluations, and I think the party is ending on this, right? So if you post a Series A pre-product market fit, don't expect another round to happen till you obviously have a product market fit. Okay, that's not really that important here. Your plan is to raise money in the next 12 months. You might be raising at the peak of the downturn. Remember, your chances of success are extremely low, even if your company's doing well. And I think that we read that above here. Remember that many of your competitors will not plan well. Oh boy. Absolutely, that will happen. Remember that many of your competitors will not plan well, maintain a high burn, and only figure out they are screwed when they try to raise the next round. You can often pick up significant market share in an economic downturn by just staying alive. Okay, very, very easy. What is a high burn? So let's say this is like exactly what happens with these startups here. So when you do a startup here, you raise money, you lose money, you gain market share, and then eventually you make money and sell for millions and millions of dollars, if not billions of dollars, right? So that is the high burn here. Now, my company, I have almost no burn other than what I pay myself, and I don't even consider that a burn, right? But most companies will not plan well. I always am planning well. So for me, it's just like that Avengers meme. Are you angry? Well, my secret is that I'm always angry. So my secret is are you planning for the worst? Newsflash, I'm always planning for the worst. So it looks like they have another video here. And then they also said, for whatever reason you don't think this message applies to your company and you're going to tell this to your person, don't believe it, please reassess your beliefs on a monthly basis. And this is something that's interesting too. And make sure that you don't drive your company off a cliff. Remember, you can always reach out to group partner the letter ads. Okay, here's the thing. A lot of founders are very narcissistic and they think that they're really good. Probably you're better than average, but not really amazing, okay? And once you realize that, you can really take yourself to the next level in business here. Reassess your beliefs on a monthly basis here. Now, I used to do this. I've talked about this on this channel a lot. So I used to do this every year and that didn't work. Then I used to do it every 6 months. And that works a little bit better. Now I do it every 3 months. They're saying to do it on a monthly basis. This is absolutely something you want to do. It's possible that this could happen. Now, YCombinator probably has a lot of ears to the ground when it comes to people in high places. And if they're telling you this, you need to make sure that you, the startup founder, is going to do that. Now, let's say you work for a startup here. Well, basically, you have to make sure that you're working for the right startup. And by the way, when carnage happens, there will be layoffs. But good companies will stay afloat. Not every company will go under, and not every company will completely just bust here. Now, most people don't remember the great financial crisis. It was a terrible time to find a job. I can tell you that. It took me a long time, and it was a very difficult time. So are we heading for that? We'll see here. I bet you the thing that, again, that I keep mentioning is that you really want to see US inflation go down. Now, here's the thing. It went up to 8, and I think it went up a little bit more. But once it starts coming down, and some people think we're at peak inflation, which I really hope we are. So the more that inflation comes from 8 to 2, remember, the Federal Reserve's mandate is 2%. So we really want things to go to that 2% inflation as quickly as possible here. And once that does happen, I think things will start to get normal. But what might happen is things might stay above 2 for a little while, and they'll have to keep raising rates. Now, it's a really big issue because, again, a lot of startups are funded on debt. And that's why they had a 13-year bull run, because if you're printing money, debt doesn't matter. And it's basically been a huge bull run here. So are things going to go back down to the way they were in 2012? That's unlikely to happen. It could be 2019 or 2016. but probably not here. The world needs more technology here. My advice is to go into Web3 and to make sure your skills are really, really sharp, because it really will matter. And the reason why it matters is because you're going to be in a competitive job environment, and the best people that will get the most jobs, or the best jobs, will be the ones that can do practical projects. And that's why I started my company, Mammoth Interactive, in the first place, is because I did online tutorials, I produced projects, I got a lot of results, but then people wanted to learn how things were done, and there was nobody doing it, and now I do that, and it's really awesome. So I highly recommend that you basically start working on your portfolio today. If you're listening to this and you don't take action, you're not doing your job here. You need to take action today to make sure your future is secured. All right, so that concludes this video. I want to know your thoughts down below. What does this mean? What are you doing to prepare for this? And do you think inflation is coming down? I want to know your thoughts down below. Please comment on this video, because this channel does not get enough comments. Thanks for watching, and I'll see you in another video.